Today, we're diving into the world of trading by exploring different asset classes. So if you've ever been curious about trading, maybe you have a friend or colleague that's talked about how they've traded gold, stocks, crypto, bonds. I'm going to be breaking down everything in 5 categories. The first category is going to be stocks. When it comes to buying a stock, you're essentially buying a piece of the company. By buying a piece of the company, you're becoming a shareholder, which means then you have pretty much share with the company's profits and with their losses. So when the company does well, your price in the stock increases. When the company's performance does bad, their earnings are bad, then you share in the company's losses by owning that stock that's going to go down in value. Now, stocks are traded on various stock exchanges. You have the NYSE, the New York Stock Exchange, and you also have the NASDAQ. The unique thing about some stocks is some of them offer potential dividends, which is an opportunity to benefit from a company's growth. Stock dividends are payments made by a corporation to its shareholders, usually in the form of additional shares or cash. The more stock you own, the bigger dividend payout you're going to receive. Now, for stocks, standard trading hours for the US Stock Exchange is going to be 9:30 a.m. to 4 p.m. Eastern time. There are pre and aftermarket trading hours, but it's known that the large liquidity pools are during the regular trading hours from 9:30 a.m. to 4 p.m. Eastern time. When you buy a stock, you can do so in the spot market, which means you're just purchasing the actual share of a company. However, in some cases, traders can use leverage through other instruments like options and margin trading to amplify their positions. The second category is going to be Forex. This is also known as the foreign exchange market. It's all about currencies. Forex is unique because you're trading one currency pretty much against another, and the goal is to profit from changes in exchange rates. You have major currency pairs like the euro to the US dollar, the US dollar to the Japanese yen, and there's dozens and dozens more. It's a 24-hour market with high liquidity, which makes it very attractive for day traders. The market literally operates 24 hours a day, but only during the week, not on the weekends. It allows for continuous trading sessions across different time zones during the week. Forex is known for its high leverage potential. In Forex trading, traders often use leverage to control larger positions than their initial capital. This allows for the possibility of significant profits, but also exposes you to bigger losses. We have cryptocurrency. So yeah, man, like digital assets have literally taken the financial world by storm. You have Bitcoin, you have Ethereum, and thousands of others that exist that operate on what's known as decentralized blockchain technology, peer-to-peer system. Cryptocurrencies offer opportunities for high volatility and high returns. But with all that said, crypto is very unique because it's regulated in some countries and others it's not. Some countries are very open to crypto, some are totally against it and have banned or restricted it. So it's very important that you're familiar with your regulations when it comes to trading cryptocurrency in your country you live in. Cryptocurrencies are often traded with leverage on certain platforms like Femex. That's my personal preference. These exchanges allow traders to magnify their positions by giving them exposure to tools like margin and futures. On exchanges, you'll notice trading pairs like Bitcoin to the US dollar, Bitcoin to Ethereum. In this example I have right here, you have Bitcoin, which is going to be the one you're trading, and the second pair is going to be the one you're trading against. In this example, we're trading Bitcoin, we're trading it against Ethereum. So these are very common pairs on crypto exchanges. So as I mentioned earlier, you have margin trading in crypto. Now in the crypto context, margin means you're borrowing funds from the exchange to trade cryptocurrency. By doing this, you have to pay interest and fees, but this amplifies your buying power. You have increased buying power, but you're going to also have more potential for bigger losses. Futures also allow traders to leverage their positions. This means you can control a relatively large position with a very small amount of money. Now, cryptocurrencies operate 24/7. There's a lot of liquidity in the crypto market, especially large caps. So for example, the biggest crypto out there, Bitcoin, you've got billions and billions of dollars in Bitcoin, so there's a lot of liquidity. But on the opposite end of that spectrum, you have small caps, which are these altcoins that have small amount of money in them, some as little as a couple million to 10 or 20 million, but those markets do not have a lot of capital in them. So they're not as liquid. But as far as the top 10 cryptos, there is a lot of liquidity. I'm going to be covering commodities. So commodities is going to be the fourth category. These are tangible assets like gold, oil, and agricultural products. They serve as the building blocks for our global economy. Commodity trading allows investors to diversify their portfolios and hedge against inflation. So whether it's precious metals, energy resources, commodities can be a really intriguing choice. They're typically standardized and divided into two categories. You have hard commodities, which is like oil and gold, and then you have soft commodities, which is more agricultural, like wheat and coffee. Now, commodities are commonly traded in the spot market. When you invest in a commodity like gold or oil, you're not typically buying the physical asset, you're usually buying a contract for future delivery. So, if you find an oil broker, you buy some oil contracts, you're not going to receive a barrel of oil to your house. You're going to get a contract with the future delivery. Commodities are traded on exchanges like the Chicago Mercantile Exchange, which is known as the CME, and then also ICE, the Intercontinental Exchange, and others. Leverage is less common in commodity spot trading, but it can be used in commodity futures. Like, in addition to futures, options on futures, commodity ETFs, and commodity focused stocks. An example of a commodity focused stock may be, maybe you buy into a commodity focused stock around mining companies. So pretty much, instead of betting on one single mining company, you have the option of this umbrella of companies that's been chosen. Maybe say it's 5 mining companies, and you're pretty much speculating on the average performance of all those 5 mining companies combined versus just one single mining company. The last category is going to be bonds. So bonds are essentially a debt security issued by the government or corporations. Bonds are seen as a much more conservative investment compared to stocks, Forex, and crypto. When you buy a bond, pretty much what's happening is you're lending money in exchange for periodic interest payments on the return of the bond's face value at maturity. So bonds are generally traded in the spot market, and they don't typically involve leverage. Now, bond investments are often seen, again, more conservative, and they're less prone to volatility compared to the other asset categories I covered. Now, bonds typically pay a fixed or variable interest rate known as a coupon. The rate is usually a percentage of the bond's face value. There's various types of bonds, from government bonds, municipal bonds, corporate bonds, and more. All right, guys, so I just covered 5 categories for some of the most common markets you can trade in. I covered stocks, I covered foreign exchange market, I covered crypto, I covered commodities, and I covered bonds. If you found this video informative or educational, please like and subscribe. Remember, trading is not just about making money. It's about being knowledgeable, managing your risk, and understanding the asset class that you are trading in. And speaking of cryptocurrencies, that is my personal preference when it comes to trading. I've been trading Bitcoin off and on since 2017, so it's been about 6 years now. I really enjoy it. I've really stuck to just trading Bitcoin solely as a pair, but I'm going to be releasing more videos that cover unique opportunities right now in the crypto market, that cover crypto trading strategies, and that cover market analysis. So stay tuned. I'm going to be releasing those videos, and happy trading.